any ideas or topics that you'd like to discuss in the future Crypto Monday, please find me after this. Tonight, we are having a discussion about all things DeFi. Ron, our moderator, will take it from here. And see you guys later.
Thank you, Rivka. That was very nice. Welcome everyone, another Crypto Monday. Today our guest is Reggie Middleton. Reggie is the founder of Veritasium, and he is also, thank you, good, thank you. He's also very, very knowledgeable about this space in general, so we're gonna have a conversation about what he's doing, and then we're gonna take your suggestions on what you guys wanna talk about. He has a huge amount of knowledge about the space. Reggie, tell us a little bit about yourself, what you're up to, what you think is good.
Hello everybody, can you hear me? Okay, so I guess a quick synopsis. I am an investor, self-directed investor. I invested in .com back in .com days. From then I did real estate. I purchased real estate in the Fort Greene area. Starting about roughly 2000 to about 2006. Right about 2006, I made an observation that 2 plus 2 suddenly equal about 115. And it doesn't really equal 115. I'm not even good at math, but I figured that was the case. So I decided to sell off all my real estate, well, in Fort Greene, and short everybody who did business with me. That ended up working out very well. I hired analytical staff because I never really trusted sell-side Wall Street. And I warned about Bear Stearns and Lehman Brothers and General Growth Properties, which was the second largest real estate company in the country. And called all of them on the downside, buying puts. I was paying an average of 20, 30, 40 cents a put. I was selling them for like $86. So from a return perspective, I did very well. Now, I would love to say I'm the smartest guy in the world, etc., but it's not the case. 2 plus 2 does not equal 115, right? It's sort of scary that I don't get it. 2 plus 2 doesn't equal 115, right?
Yeah. Right.
Okay, it's not a lot of conviction there, but okay. So, what I did was I calculated that price at 115 would drop somewhere right below 2, and then bounce back up and hover around 2. And that's basically what happened. For about 6 years, I ran what's called a boom bust blog. I had a blog that a lot of wealthy people and investors and companies would pay me good money to read my opinion analysis. And we had about 86 or 100 calls. And there was a client that I had who kept asking me to look into Bitcoin. So he asked me in 2010, I ignored him. 2011, I ignored him. 2012, I ignored him. In 2013, I finally decided to see what he was talking about. I looked up the Bitcoin Wiki, the Bitcoin white paper. My jaw hit the floor, and down the rabbit hole I went. 2013 to almost 10 years later, 2022, I wound down my advisory business and my investment and went headlong 100% crypto. At the time, the only crypto that existed was Bitcoin. But I looked at the Bitcoin white paper from a very different perspective. I saw financial engineering, derivatives, and the ability to use a blockchain as an incorruptible counterparty. Most other people looked at it as the little Bitcoin, the little KCP, prices going up and down, and they looked at it as a speculation vehicle. Well, I looked at it as the ultimate counterpart. So I created, any finance guys in here? Or women? 3. So what I did was, I took an ISO agreement and I encoded it to the blockchain. Who knows what the ISO agreement is? International Swap Dealers Association. It's a plain vanilla contract to make a swap. It's roughly about 93, 96 pages. It's a template that you specialize. Out of that 96 pages, 93 and a half pages are about risk. Prevent him from reneging on paying me and dropped it from 96 pages to about 2.5 pages. And I took that 2.5 pages and I made a version of a smart contract to go on the blockchain. And the first swap cleared in December of 2013. Then we created our application, BTC Swap, throughout 2014, and basically it exchanged Bitcoin between two wallets that we built and injected a data feed. And the data feed adjusted the payments to the wallets. That data feed was a ticker symbol. Stocks, bonds, currencies, precious metals, oil, yields, rates, you name it. Basically anything you can type in the Yahoo. And that was the first high-end DeFi project from my perspective. We also filed patent applications at that time. This was May 2014. So, despite the fact I had all these wonderful calls of predicting bear stearns, and the reports are still on the web, so you can go to read Reggie Middleton, Bloomberg's blog, The Breaking of the Bear. You can see the bear stearns report. Phenomenally accurate, okay? But again, it's not magic. 2 plus 2 does not equal 115. So from that point, had an issue raising money, and then there's the regulation perspective. And after Sarbanes-Oxley, it looked like our product would be considered a swap versus software. And I didn't consider myself a financial entity. I consider myself a technology company that wrote software. So I dropped that. I did an ICO in 2017, raised 14, 15, 16 million dollars. Could have easily raised more, but didn't need any more. And I created a whole suite of products for the Ethereum blockchain. Went very well. We were delivering all these products ahead of time. And then we had this government agency who knocking on my door 2 months after the ICO. So I'm wondering, why would you be knocking on my door? I'm the cleanest guy in town. So, and I wondered that for years. Now I know why they knocked on the door, but I'm not going to discuss that because I'm not going to discuss that. But they knocked on a lot of doors after that. They called me a lot of nasty names. They called me an alleged financial guru, despite the fact that I predicted every major crash for like 6 years, and a bunch of other things. I ended up settling. They confiscated $2 billion worth of our tokens and about $10.5 million worth of cash, gold, options, etc. Totally wiped me out. And accused me of fraud, alleged I was, fraudulent. It was never proven. I never admitted or denied it, except for my legal papers. But I'm not supposed to say that. But if you read the legal papers, you see 467 pages with very ardent opinion, with 12 witnesses, etc., etc. So that was 2019. Since then, they went after a lot of other companies. They picked a company that I think they might not be able to beat. I don't know if you follow the news, but the same prosecutor that came after me went after Ripple. And Ripple has an extremely strong legal team. Their legal advisor is an ex-chairman of the SEC in the Obama administration. Her backup is an ex-chief of enforcement for the SEC in the Obama administration. They have White Case, which is one of the best securities law firms out, and they're doing a fantastic job. As you can tell, I'm not a big fan of SEC enforcement, and I'm not anti-regulation, but I am anti-picking winners and losers from behind a bureaucrat's desk. That's not how you do it. You let the market be the market. You have a bad actor, you go after the bad actor, okay? But there have to be a bad actor for you to go after. So we're gonna push that aside before I get myself in trouble again. And 2 years after that, a year and a half after that, the patents that we filed in 2014 started to hit. I prosecuted those patents, which meant I was doing legal wrangling back and forth. You should grant it, you shouldn't grant it, this is why, etc. For 6, 7 years. It was granted in Japan. No, it was allowed in Japan in October of 2020. I filed a few more patents and then I paid for the issuance. And it was granted in January 2021. The US granted me one about a year later. So we have what I call Aboriginal patents, aboriginal DeFi patents. In Japan and the US. The US is the world's largest economy and the largest crypto economy. Japan is the world's third largest economy, but probably the world's second largest crypto economy. Because Japan has one of the biggest banking systems and the biggest economy, and more importantly, their rules are written down in black and white. So if you want to know if it's legal to do something in crypto, you can open a book and look. Can you do that in the US? You can't. Okay? The US is currently regulated by enforcement versus by decree or law, in my opinion. So, what do these patents mean? Long story short, I created DeFi, DeFi, and now the US and the Japanese government agree with me. And I own the intellectual property behind the conditional transfer of that. So, I'm going to be bold and give you examples. Uniswap, Solana, Ethereum, the Bitcoin Lightning Network, Ripple's on-demand liquidity through RippleNet, a wide swath of chains, applications, etc. use the intellectual property that we patented back in 2014. And so I went from 2000, 21 years later, 22 years later, now 2022, and this is where we are now. So my expertise is multidisciplinary, and that's probably what sets me apart. Doesn't make me better, but sets me apart in terms of viewing insight. That's why when I looked at Bitcoin, I saw things such as swaps, financial engineering, and other people saw remittances, because I came from a different background. I have applied experience in global macroeconomics, very strong in valuation and investment. I'm a tech nerd. I'm a nerd, 100%, but I'm not a developer or engineer. I'm not a lawyer, but unfortunately I have a lot of legal experience the hard way, nothing to brag about, okay? On the defense side. And that's where I am. So I would like this to be a back and forth discussion. And what I'll do is I'm going to be, I'll piss a few people off and try to get the conversation going. Anybody interested in NFTs? Raise your hand. Not anymore? Okay. Who wants to discuss NFTs?
I'm interested in selling my NFT.
Us? Who's us? What's an NFT? You got, speak up. What's an NFT? You say it so everybody can hear.
What?
It's a digital asset with the ownership stored on a blockchain.
Okay, so what's the F stand for in NFT? What's the N stand for? So a non-fungible token means, say it so everybody can hear, just in case. There's only one? Okay, so does everybody agree with that definition? Okay, so give me an example of an NFT. Somebody else. Come on, pick on. Give me an example of an NFT.
Ape monkey.
Oh, ape monkey?
Yeah, the one that's like every Twitter profile. Yeah, Bored Ape.
Bored Ape, and why is that an NFT? What makes that non-fungible? Really? What's the most popular NFT you can think of? Bored Ape? Okay, who likes to bet? I have a wager. Who wants to? Okay.
Bet?
Yeah.
I like to bet.
Yeah, we're gonna bet money.
Yeah, I'll bet.
Okay,
money.
who? Both of you come up. You just have a bet.
Sure.
Okay, come on.
What about the Banksy?
Can I only lose or can I also win?
Say it again.
Can I only lose or can I also win?
Well, you could win if you win, but you're not gonna win, so you're probably gonna lose. Okay. So come on up, hurry up. Aren't you supposed to be doing a video for me? Okay. So, the most popular NFT?
CryptoPunk?
CryptoPunk? If someone put $5 up because I don't trust you pay up.
Okay.
Cash?
I have
$5.
to put up $5?
Or you could do something bigger. You want to do bigger?
I mean, I have my DeFi wallet. I don't have cash anymore. I'm on bank.
Okay, so the pot is $10.
1 second.
Okay? His credit, but
Okay. Okay,
yo, you
$100.
take that one. I can do that one. What is that?
I don't know.
100? Okay. Or you win or lose 100?
We'll find out.
Okay.
What are you betting on?
Put 100 down. You're betting on
Can I ask somebody to help me with
whoever
that?
whoever
I'm not
names
betting on the bar.
whoever. Yes, you already did. Too late. Whoever names the most popular NFT wins.
What's
Oh, somebody Google it.
Yeah, wins the pool.
There you go. Help me.
So put your $100 down, and yeah, I have $100
I
here.
need change on my $100.
No, the bet is 100. So
I'm not betting on
you
$100.
walk away with
I worked too
300
hard.
and change. Okay, so
Sandbox.
say it again.
Sandbox.
Sandbox. I don't know what that is. Okay, that's what she said. Okay, what do you say?
Oh, I'm not there yet. Hold on.
Okay.
What other things you got?
People. Okay.
I need someone to Google it.
What's the question?
Okay. NFT.
So in aggregate, if you consider all NFT transactions, every single transaction of an NFT on chain, gorillas and monkeys in general are the most popular.
I said that the first 4 days, bro.
Okay.
But you said
but-
bored apes, but bored apes are very expensive. We also have to consider all the derivative gorillas and apes that are considered a part of
Falls
it.
under the board that y'all clap, but y'all also said.
Okay. Okay. She has the terminology going. Is someone recording this? Because I would like the video. Okay.
He didn't say.
Okay. Well, we got to move this forward. Come on.
I came to learn, but I can
Okay.
make money if I
Okay,
play.
well, you know, you're gonna learn that you don't bet $100 you don't know what you're gonna have. That's gonna be a lesson.
I'm still waiting for
Okay, so, I'm gonna stand up. She says bored apes. Okay, raise your hand if you think bored apes is the most popular.
4 days.
Bored apes, and you say? Someone wanna answer for this guy?
Someone answer for me.
What's the right answer? Just meant to take one from me.
Okay,
Yeah.
Yeah, go ahead.
Yeah.
go ahead. Bitcoin,
Is that a fucking?
No.
okay,
That doesn't count.
okay,
What is the question?
There's something called
Is Bitcoin
the
an
merge.
Oh,
okay. So, okay.
The merge?
The merge, okay. Bored apes, the merge. I can't have it. His doesn't count because you're not part of the bet. You didn't put $100 up. Okay. So the winner is Bitcoin.
No, you're not right. It's not Bitcoin.
Oh really?
Yeah, it's not Bitcoin.
Oh, you're just saying that you don't want to lose $100. But Bitcoin. I tell you what. Tell everybody why it's not Bitcoin. Go ahead.
Because it's fungible.
What does fungible mean?
Oh.
No, listen. I asked you one question back on what you're saying. You can't choke. What does fungible mean?
Exchangeable?
One Bitcoin, you can exchange one Bitcoin with another.
Yeah. Who has can you pass my phone? Or any phone? I'm gonna make this a very fair loss of your $100. Just ask Google what ask Google what
Most popular NFT
no. What is the definition of fungible?
Fungible, of goods contracted for without an individual specimen being specified, able to replace or be replaced by another identical item, mutually interchangeable.
Mutually interchangeable and to be replaced by another identical item. Mutually interchangeable and to be able to be replaced by another item. Is that Bitcoin? Is that Bitcoin?
Bitcoin you can exchange for another
So
Bitcoin.
am I right?
No, you're not.
Damn.
Yeah.
We need a judge.
No. We'll go walk through this.
We need a judge.
We'll go walk through this.
We need a judge.
Yeah, listen. Does everybody remember the couple who allegedly tried to launder the $6 billion?
It's 4.3.
$4.3 billion?
Yeah, 4.3 billion.
Did they get caught?
Yeah, they got caught.
How?
Didn't they track their wallets? I don't know the story.
That's all right. Just come. This is interactive. Isn't it more fun with everybody else talking? Come. Don't be shy. Speaking to the mic.
I think they tracked their wallet addresses and saw the flow coming in did not match up.
Okay. What was in the wallet addresses that they tracked?
Like like the wallet addresses, like while they open their Bitcoin.
For their what?
For their Bitcoin.
One more time.
For their Bitcoin.
So that Bitcoin that they track, oh no, stop, no. That Bitcoin that they track, right? Do you think that Bitcoin is fungible?
I don't think so, no.
Why not?
Because they're not interchanging it. Each Bitcoin has like, I don't know, like each Bitcoin is tracked.
I'm gonna walk you through it, okay? Right?
Yeah, it's like unique identifiers.
But Bitcoin doesn't have a unique identifier, at least most people don't believe they do. But the guy, right, the male allegedly took the Bitcoin, spread it among a couple of hundred public addresses, sent it into a mixer. Think of a mixer as a shredder, where you take your document, you have a contract, you put it in the shredder, and it makes 800 pieces of paper with it. And then he took those pieces of paper and spread them around a whole bunch of wallets. Chain Analysis took an application that they developed. They unmixed the Bitcoin, and then they attributed the Bitcoin to him because it followed patterns A and B. He went through a centralized exchange, such as Coinbase, where he had the KYC, so he gave his wallet, social security number, etc. But that's not the point. The point is, if each Bitcoin is truly fungible, one Bitcoin can be exchanged for another Bitcoin without an issue. Do you think that stolen Bitcoin can be exchanged for another Bitcoin without an issue?
No, but I didn't see that it cannot. But that's not.
Well, if it cannot, then it's not fungible. Because I just gave an independent.
No. Well, it could. I think it could. You said the reason they found it is because of the KYC, not because it wasn't fungible.
No. They found him because they unmixed his Bitcoin. He sent it to a mixer.
But those are
Everybody wants to
they follow patterns.
Wait. Everybody wants to comment. Come to the mic. Go ahead.
No, I would say those are more how Bitcoins get stored. There's an ID where you track it's stored, but that doesn't mean it's fungible. It's just tracking the transaction where it's stored. And that's traceability.
Okay, so hold on. So you send a Bitcoin through a mixer.
Okay.
Right?
You just Google it.
Right? One
Bitcoin
second.
is a fungible asset.
and I'm the most handsome guy in the world.
Well, I didn't bet on that.
Okay, so when you do research, you can't Google the answer. You have to determine the answer.
You did that before with your phone.
Right, because I gave a definition. So we're gonna walk through it. Okay? Once that Bitcoin is tagged, that's what happened. They unmixed the Bitcoin and they're able to follow the Bitcoin through the chain. Right? When the FBI is following Bitcoin through the chain, that Bitcoin is tagged. It is not fungible. Right? I can't take my dirty Bitcoin and exchange it for your clean Bitcoin and for it to be a one-to-one exchange. My dirty Bitcoin is worth less than your clean Bitcoin. Or do you disagree? You agree or disagree? I disagree. Okay, come. Speak your piece. Let's go quickly so we can move on. But I like this debate. By the way, is this fun? Educational? Okay, go ahead.
It's only fun if you're right.
Well, because you bet $100, that's why you say that. But go ahead. Go put it full. Yeah. Talk to them.
Yeah. So I mean, if you steal $100 bill from the bank and then you go to the store, like you can buy anything you want. No one's gonna say, hey, this is not fungible. So
I can prove you wrong here. This is a $100 bill.
Yeah.
What's that thing in the lower left-hand corner?
Serial number. Yeah.
That's not fungible, my friend. If it's a serial number, it's not fungible.
Fungible means
Hey, where'd the $100 go? Hey! See?
Let me give it a shot. Okay. The history is the only thing that makes it non-fungible.
Can't hear you.
The history of Bitcoin is the only thing that makes it non-fungible. For example, like if I gave you $1, any dollar, would you exchange it for any other dollar? You wouldn't care. If Putin came to you today with $1 million worth of Bitcoin and he said, I'll give it to you for 500,000, would you take it? Because it's got a history, so you don't want it.
Okay, so repeat your first sentence again in the mic nice and loud.
It's the history that makes it non-fungible.
Okay. So it's the history that makes it non-fungible. Everything else, stop. If it's non-fungible, it's... Help me out. If it's non-fungible, it's... non-fungible. So you can't say, I'm 6'2", except for I didn't get there yet. If you're not 6'2", you're not 6'2". So you can't say it's a history that makes it non-fungible, and except for that, it's fungible. Once it becomes non-fungible, it is? Help me out, one more time. Once it becomes non-fungible, it is? Again?
Non-fungible.
There you go. Okay, the guy just left. You owe me $100, dude, but okay. So, I say this because it's very, very easy for people to listen to the wisdom of the crowds, okay, for a definition, etc. But you know what the problem with the wisdom of the crowds is? The crowds aren't wise. If the crowds were wise, then you never have very, very wealthy people, at least wealthy from their own meritorious efforts. In order for me to become wealthy, assuming I did it fairly, then I would have to be having a significant advantage over everybody else. I can't have a significant advantage over everybody else if everybody else was as wise as I was. Okay? That is, you know, the concept of efficient market theories and all that is absolute nonsense. One of the biggest promoters of efficient market theory is Warren Buffett.
Warren Buffett.
Okay, Buffett, right?
Close.
And Warren Buffett. Okay, and for someone worth $100 billion, you know, his existence proves that efficient market theory doesn't work. Okay.
Works for everyone but him.
Excuse me.
Or it works for everyone but him.
So, Bitcoin is truly a non-fungible token. Okay, because so is Bitcoin. Another example is the Bitcoins that were donated to the truckers protest in Canada. Okay, they came back to the States. They were traced all the way back and found in Coinbase and Kraken. Anybody think they were frozen? You can bet your petunias. How are you going to freeze? Once that token is frozen, is it worth less or more than any other Bitcoin? Why? Because it's frozen, because you can't use it, right? If you can freeze a token because of its history, it's non-fungible by definition.
Well, I got a question for you.
So come on up. Don't make me do all the work. Okay.
So here's my question. If you're going along this
Put it
line,
close to your mouth.
if you're going along, so if you're going along this line of thinking, how does Bitcoin have a future?
Does anybody familiar with the history of this? The Federal Reserve note? This is actually called the Federal Reserve note. It's a liability on the Federal Reserve. But this used to be called a dollar, the continental dollar, etc. This is the longest running fiat currency in the history of mankind. Alright? Does anybody think this has a future? Raise your hand.
We all believe it does.
Okay, so everybody who didn't raise their hand, empty out your accounts, give it here. Of course not, total silence. So, just because something is non-fungible doesn't mean it doesn't have a future. Okay, very few things are perfectly and absolutely fungible. I mean, there are things that are, there are many things that are, but Bitcoin is not one of them. Okay, dollars are not one of them. Despite the fact nobody checks that serial number, when those dollars are marked, they can be trapped and they can be frozen. Particularly when they're done in a digital fashion, because nobody bothers to check the paper. But once it's done digitally, it's much easier to check it. Now we're going to the next step, because digital currency in the US is really old hat. It's been around since the late 60s, early 70s. Most of the people who have Federal Reserve notes, most of those Federal Reserve notes are in your bank account, not in your pocket as paper. Your bank account is simply a ledger of credits and debits. Electronic digital money, digital currency. Now, most of the major developed countries and their central banks are moving to central bank digital currencies. Despite the fact some of them are lying to you and saying they're not, they are. So you have the EU yuan, you're going to have the e-pound, the e-Canadian dollar, you're going to have the e-US dollar, etc. This next evolution in digital currencies are going to be the most non-fungible with a capital N, capital F, lowercase t, most non-fungible tokens ever, because they're going to allow them to have significant control over fungibility. Let's walk through. Who uses iPhones here? Raise your hand. Okay. You should switch to Android. We've got this discussion on that. Okay, so you have your iPhone. Who has an Apple Watch with an iPhone? You have to be ashamed. No? Nobody has Apple Watch? Okay, who has a health app on their iPhone? Okay, so you have a health app on your iPhone. You have brand new issued CBDCs. Okay, central bank digital currency. Basically, crypto that comes from the government. You decide to go and rob a bank. You get away with robbing the bank down the street. No camera saw you. Okay, you get away with it. You rob the bank, you rob CBDCs. Okay, and you decide to buy a Snickers bar on the way just to justify you being there. You get caught without any cameras, without any witnesses. How did that happen?
Money's tracked.
Let's walk through it. Let's walk through a 1984, George Orwell scenario, okay? Because I'm a nerd. So they didn't see you on camera, but they have your GPS location, okay? Don't believe that they can't get into the iPhones at the federal level. Maybe the state, no, the federal don't believe that. They have your GPS location, okay? They have the transaction when you bought the Snickers, right? They have the CBDC that you stole. They asked you if you stole it, you said no. Your heart rate spiked when you said no. Your heart rate spiked at the exact same time you made the transaction with the Snickers. All the metadata is available between the CBDC, your iPhone, and your watch, even if you don't have the watch. Okay? You disagree?
Oh, no, I'm shaking my head at people reporting this.
Oh, okay. So, that level of granular traceability is easily available through CBDCs. I can even go a step further. You jump on a plane, you go to China, okay? And you say, President Xi is a exclamation point asterisk. When they do the curses in the comics, okay? All of a sudden, you are 50,000 yuan poor. You just had an anti-government comment tax because the CBDC are now programmed, right, to make you borrow or charge you a fee if you say something negative about the government, if your social media score is above or below a certain level, etc. They can easily control all of this. They can control your reaction to it because you're wearing sensors everywhere. You're carrying GPS, you're carrying heart rate monitor, a lie detector basically. You are carrying a guaranteed credit debit ledger of all your expenses, all your transactions, and most people are creatures of habit, so they even know what you're going to do next by running your historical transactions through an algorithm and projecting your next 2 or 3. And if you think that's not accurate, go to Google's Chrome browser right now and type in a search. 80% chance that church will finish what you intended to type in the first place. I find it amazing. At least it gets it for me. Okay?
It's very true.
Okay. So that's NFTs. Anyone want to discuss NFTs more? Because NFTs have a lot of promise. They do. Music and Bored Apes are not what NFTs are about. Okay? Speak up so everybody can hear you. Or come grab the mic. Okay. Almost vocal noise is not a word.
Okay.
I best with people so far.
So I hope by now everyone has a better idea of what NFT projects are. You have your eyes set on one. What is your advice as far as utility? Because you can build a pipe, sell out your NFT project, but in terms of creating utility to connect your project to the real world.
Well, I believe everything in the world is the real world. So if you go back, I'm probably the oldest person here, or close to one of them. So if you go back to the 1991, right? Very few people even knew what the internet or World Wide Web was. They referred to it as, well, in the real world versus the web. Fast forward 20, 25 years, 30 years. Now, the real world is the internet, and most people don't even think anything off the internet is the real world. So Technology goes in cycles and waves, and the beginning of the cycle is considered not the real world, but it is the real world. So NFTs are the real world. To make the NFT of true value, it has to have utility from the beginning. If it doesn't have utility, then it doesn't have value. That's a guarantee. Just because you're able to sell it to somebody for $5 million doesn't mean it had value. That means you got somebody for $5 million. Okay, if they can resell it over and over a period of time, then it did have value, and just the value wasn't recognized. But that seldom actually happens. So the best utility for the NFT, in my opinion, is the fact that it is truly non-fungible, so it's truly unique and easily identifiable, and it's programmable. So as an example, what business are you in?
So we actually, I have a TV network for creatives, and she's a designer, but we're actually launching a women empowerment NFT project called Boss Ladies NFT pre-sales on Sunday. And our mission is focused on helping women-based businesses raise funds. So we're partnering with venture capitalists and also donating up to 10% of our proceeds to women-owned businesses from our community.
So, TV network, right? Your primary source of revenues is?
I have an accelerator.
Okay, what's your primary, where do you get most of your money for your TV network?
Production for small businesses.
So you charge to produce, or you have ad revenue?
I charge.
Okay, so you have a show that you produce, that you charge, okay? You NFT the show, okay? So the show is the NFT, okay? When you charge, right, you would sell them the NFT, okay? You sell them the NFT has in its metadata and its smart contract a provenance contract. So that provenance contract can follow that particular media along its chain of ownership, to the provenance means, and it kicks off 10% of the revenue back to you, of all the revenue. It kicks off 10% of every transaction. So if someone sells that to somebody else, it kicks it off. That media can live on the blockchain, or it doesn't have to live on the blockchain. It just cannot be decrypted without access to the blockchain. That's how you enforce that payment. Now you created something of real value, assuming that whatever you produce had demand. Let's suppose you produce something that has a lot of demand, such as the Medea movie series. Medea movie series, anybody familiar with it, that's the guy who dresses up like the mother, Tyler Perry. It has a lot of value because his production costs are very low relative to how much money he generates. So he releases a movie, he makes $150 million. It's a blockbuster because he paid $2 or $3 million to produce it. So assuming he paid $3 million, he made $150 million. That is $147 million of gross profit. The NFT is worth $147 million at that time, plus every time it's played over and over, it kicks off another 0.2%. So that NFT now has annuity value, revenue stream. It has a net present value of the lump sum, and it can be sold to another movie house. And that sale is tracked along the blockchain, and you get a piece of that. So now you can monetize it, you can value it using discounted cash flow, which is a common valuation technique. And you can say that 147 million plus XYZ additional. You put a risk factor on it, you bring it back to today's value. The NFT is worth $167 million cash. And you can prove it based upon the track record. Compare that to the Bored Ape. With the Bored Ape, you don't get ownership of anything. So to make the NFT have value, you have to own something. And there are two ways to have ownership of value. You have cash flows, money you get every periodic point, every time, every month, year, etc. And you have resale value. Okay? And that's how you value NFTs, and that's how you do utility. One example. Second example of utility, or the primary example, that's a subset of a primary example, and that's contracts. NFTs are perfect for contracts because you can delineate each and every clause with specificity. And once you put it in the contract, it can't be broken, and everybody can read it. It's right in the middle there. You can pull it off the chain, you can read it. Second big use of NFTs is ID. Hopefully, legally, every single ID should be non-fungible. But you have some guys in certain businesses whose ID is very fungible because they have 40 of them and they all represent, and depending who catches them, his ID says something else. But assuming you're following the law, you have all your IDs are non-fungible, but you can lose your ID because you get in trouble for it. It can be counterfeited, etc. An NFT cannot be counterfeited very easily at all, if at all, right? You can't lose it because you can just go to the chain and pull it in. A variety of situations. Once you pull it in, the NFT in the metadata, or with encrypted pointer to other storage, can have a retina scan, it can have your fingerprints, it can have a genetic sample, your DNA, your picture, a description. It can get very, very particular and specific in terms of your identification of who you are. It can't be taken from you, and it can't be faked. Wouldn't that sound cool? Any audience participation? I'm gonna borrow you. Wouldn't that sound cool? Okay. Yeah, that's it. Raise your hand, walk up, because I just came back from the gym. I'm so.
I think it's a really interesting use case. I'm trying to think of if I have an NFT that is for identification that I replaces the physical ID I have. What's the UI entry point? Is it using my phone or a retina scan or my fingerprint or face scan to actually? How do I verify to get that information between the physical world and the NFT and all that information being stored and being non-fungible? What's my opinion to it? That's what I'm kind of curious about.
Well, my guess would be government issue. So,
Centralization.
Well, everything is centralized. So we can have the discussion of decentralization and centralization, but I can guarantee you not a single person here can name a fully decentralized product, company, or anything. Because centralization is necessary for efficiency. When you go to extremes, you have weaknesses. Same thing with decentralization. We could discuss DAOs. Does anybody know what a DAO is? What is a DAO? I need somebody smart to come up. The guy back there raised his hand. Yes? Come on. I'm going to mess with you all night or you can just come up. But I never raised my hand again.
It's a decentralized autonomous organization.
Okay, so for people who don't know what the buzzword is.
So instead of entities being top down, they're like a vertical. Instead of entities being top down, they're vertical. It creates a more democratic sort of entity where people are able to vote on different things that the DAO presents.
So are DAOs decentralized?
In a way, but there's still people that control it.
Well, if there are people that control it, how is it decentralized?
It's not fully decentralized, but I guess the goal is for it to eventually become fully decentralized down the road. The tech isn't there yet, or at least you need the human factor, at least this week, to set up the DAOs, to set up the technology, to set up the smart contracts.
So once that's done, is it decentralized after that?
Well, we don't know, because we don't know the future, but hopefully eventually.
So,
never fully decentralized. It's a misnomer.
Yeah. Well, I personally can't think of a single project that's fully decentralized. When I say that on Twitter, where I spend some time, everybody says, what do they say when I say there's no project fully decentralized? Bitcoin. Raise your hand if you think Bitcoin is fully decentralized. Just like Bitcoin is fungible, non-fungible, fungible. So, why is Bitcoin not fully decentralized? Or not decentralized at all? Miners?
Yeah, mining power that you can aggregate together to influence voting power.
Okay, so is it aggregated or can it be aggregated? How many points of failure or entry does it take to be considered decentralized, in your opinion? Like 1,000, 10,000, 100,000? Okay, I guess you want to answer the question. How many?
It's a formula, right? It's the Nakamoto coefficient.
Oh, really? I don't think Nakamoto knows about it. But school us.
Well, I mean, like for every like for every protocol, if you need a certain number of nodes to control a certain number of nodes in order to really control all the nodes, right? And so there's a formula out there that this guy Banerjee came up with called the non-commodal coefficient. That if you use that methodology, you could at least make it very hard to take over control of protocol.
Really? Here, let me push back on that. So, how many people control the admin account to Bitcoin GitHub? Take a guess. About 5. It was 7, but I think it's 5. 5 people. That table right there, that's Bitcoin. Does that table look decentralized to you? 5 people. 5 people can change the entire Bitcoin code. 5. It's not even close to decentralized. I mean, not even, it makes no sense to call it decentralized. Now, that's not a bad thing, but it's a bad thing if you really, really think Bitcoin is decentralized. Centralization is necessary for certain attributes, just like decentralization is necessary for certain attributes. Bitcoin is much more censorship resistant than censorship that you are, not OR, resistant than the more centralized projects, but it's also much slower, much more expensive, etc. It's a trade-off. You know, just like good and bad. Nobody's totally good, nobody's totally bad. If you listen to Putin's reason for invading Ukraine, actually I listened to him say it, and it still sounds like a very bad reason, but I don't think he's good at eliciting sympathy from people. But if you listen to other people, they say, well, they took, NATO took nuclear capabilities and they put it right at his border. And they said, if Russia took nuclear capabilities and put it on the Canadian border, the Mexican border, the US would do something about it. So, you know, whether you like dislike it, you like the states in Europe, and Europe would dislike it, there's always 2 sides to the story. Everything works on a spectrum, okay? Centralization here, decentralization there. Nobody's here, nobody's there, but everything rests on the spectrum in between. To assume that Bitcoin is fully decentralized is to assume this table is decentralized. And this table is the entire admin capability of Bitcoin, which I think leaves a lot to be desired. Now, does anybody push back? Does anybody disagree with that? Is it because nobody wants to get into an argument with me? Let's talk about another topic. More questions?
So what's the scope of your plans? Like how broad are the plans?
The claims are actually rather specific, but they're broad in terms of the crypto space because the crypto space is moved onto the patent. The patent office doesn't allow you to do broad claims. They tell you specify, be very specific, etc. But because it covers conditional value transfer, what do most crypto chains and projects do? Conditional value transfer. For instance, it covers NFTs. Not, if you make an NFT, you don't infringe on the patent. But if you transfer the NFT to somebody else, it infringes on the patent because the NFT usually reads a data source from another source, a data feed from another source, and that's how it derives its value. And then we move it from point A to point B along a decentralized currency with private keys that infringes on the patent. It's really just that simple. But using that ideology, almost everything works like that. Ethereum's compensation network for gas for miners. It's like a gratuity system. So you pay the transaction fee, okay, and that gets burnt with the newest version of Ethereum that's deployed. And then there's a tip that you pay a miner that incentivizes them to run the transaction. That tip infringes on the patent. Without that, Ethereum doesn't run. I could go through this with Solana, with Ripple, with the Bitcoin Lightning Network, and most of the chains, and this is the weakness of the development that's done in the industry, very, very, very original ideas have come up, not since Bitcoin and Satoshi. Ethereum is Bitcoin with the EVM. I don't want to get too technical. A virtual machine. Okay. okay, or more advanced, that runs a more advanced scripting language. Most of the Ethereum killers are really Ethereum copycats. Most of them are started by members of the Ethereum development team. Cardano with Charles Hoskin, who worked on Ethereum, and Downless, Polkadot, another Ethereum, and there's nothing bad about it, but if the original idea infringed, anybody who forked or copied or improved upon the idea likely infringes as well. When I did my ICO, there was an Israeli company that did one roughly about the same month, Bancorp, and they came up with an idea of pricing liquidity and illiquidity to provide liquidity to illiquid tokens. Interesting idea, a lot of people didn't take it seriously, but they raised a lot of money. And then a guy from Brooklyn, Stony Brook, said, I think I can improve on that. So he forked Bancorp and got a $100,000 grant from Consensus, which is also in Brooklyn. And he created something called Uniswap. Uniswap did very well after Hex came to Uniswap. I'm not a big fan of Hex, but I'm not going to go there. And then Uniswap did so well, somebody else came in, looked at their code, pushed that little button in GitHub, and they forked it, and they produced SushiSwap. And SushiSwap did very well. They took 50% of Uniswap's liquidity in like a day or two, or a couple of days. And then somebody said, wow, you did very well. You didn't have to do any work. You just copied it and it don't work. Well, then I'm going to copy your code and do no work. And then you have PancakeSwap. And PancakeSwap was invested by Binance, etc. So now we have several generations of all these swaps. But guess what happened? Bancorp infringed on my patent. So Bancorp infringed on my patent, then Uniswap infringed on the patent. If Uniswap infringed on the patent, then SushiSwap infringed on the patent. If SushiSwap infringed on the patent, then PancakeSwap infringed on the patent. Okay, say it again?
Something like a margin call?
Yeah, a margin call. Think with the domino effect. Now, it's not that the patent is broad, it's that there's very, very little original thought in a lot of these projects. And I'm not trying to downplay the developers at all. But if you fork a project, you use it, you have to make sure that project is clean from IP things. Nobody does that. Okay? Including people who are very, very smart. You want to hear another story? Gossip in the industry? I would have a lot of friends after this. So, anybody here at Compound Labs? Compound Labs infringes on a patent, traditional value transfer. Compound Labs did a token offering, but before the token offering, they got a lot of private equity VC money, big VCs. Coinbase Ventures, Bain Capital. Bain is one of the largest consulting firms in the country or the world, and they have one of the best track records in private equity and venture capital. Coinbase is the largest exchange, very strong VC, and Andreessen Horowitz A16Z fund, big Silicon Valley investor. Mark Andreessen is the guy that created the Netscape browser in college, UCLA. Netscape browser is now Firefox, which is now Mozilla, but he basically created the browser. He didn't create the first browser, but he created the second and the most used until Microsoft came in and used their bully power to take over. These are all very big investors. They really know what they're doing. So they invested in Compound Labs. Two big mistakes they made, and these are three of the biggest venture capital investors in the world, in this country. One mistake was they didn't check for IP, so nobody checked to see if Compound Labs infringed on the patent, and they do, and not just my patent, but others. They also invested through a DAO, and the DAO is decentralized, right? So if it's decentralized, and they invested in a company that's infringing on a patent, and the owner of that patent decides to do something about it, he sends a cease and desist letter out, or a notification of infringement letter out, and he sends it not to Compound Labs. Where do you think he sent it? Or she? No, to the DAO. So, the DAO is decentralized. How does the DAO respond? Tell me, how does the DAO respond?
I have no clue.
Neither does the DAO. Because the DAO is decentralized, it can't respond. If you don't respond, if you're up in a court and you get a summons and you don't show up, what happens? You lose by default. It's called a summary judgment by default. So the people who put this 20, 30, 40, $50 million in the compound apps are losing by default because they can't show up. If they do show up, then that decentralized autonomous organization should be called a cow, not a DAO. A cow would be a centralized, or I gotta get it wrong. Cow. Okay, this is a tough crowd. Come on. Cow, that was funny, right? Okay. So if they can't respond, right, they lose by default. This guy takes his default judgment, he just walks on and hits everybody with the same $25 million. Why can he charge everybody $25 million? Because the judge will consider, most likely, I'm guessing, and I'm not a lawyer, right, that this is, even though it's not an LLC or an Inc., it is still an unincorporated business entity. An unincorporated business entity is treated like a partnership. And a partnership, right, the members of the partners of the partnership share joint and severally liability, which means everybody is liable for that $25 million, jointly and severally. Big mistake going through the DAO without having the DAO vetted, number one. Bigger mistake putting money into something without vetting it for IP. I'm not picking on these guys, nobody vets for IP, which is why you have a dude from Brooklyn who controls, potentially, in his opinion, of course, and I'm not that bright, the vast majority of transactions in the crypto world. If the panic goes on.
We'll find out. All right, we're gonna wrap it up. Any other questions from anyone?
So, are you currently suing all these
I'm not the. I haven't sued anybody yet. I don't have litigation, but a lot of people, especially in the crypto space, don't understand intellectual property. They think intellectual property is somehow different, right? There's this thing called, and the open source has nothing to do with property. It just, it's the way you write your license. It has absolutely nothing to do with property at all. There's this thing called the Constitution, and in the Constitution there's an amendment. Number 14 guarantees property rights. So, here, do you have a house or an apartment? You own or rent? You own. So, your house is considered, or your apartment is considered real property. I'm gonna move in tonight with you, okay? You have a wife or a girlfriend? Okay, because if you did, I was gonna open source it, okay? Okay, well, no, because, you know, you believe in open source, so I'm gonna open source it. I'm gonna bring everybody here. I'm gonna invite them over to your apartment or house. I'm gonna charge rent. And I'm gonna collect rent from everybody off of your property. What's your response to that? Why not? Why? He said that's not gonna happen. Why won't it happen? So, do you see how protective he is over his what? Property. Yeah, nobody has any problem, nobody has any problem understanding property rights when it's their property, particularly real property. Well, one second, or personal property, like a car. You drive your car, I jump in, I kick you out, and I drive away with it. Because it's open source. Or you should share. Should you share your car with me? Okay, so this guy is crystal clear on property rights, primarily because it's his property. If it's my property and it's intellectual property, it should be open source and everybody should be able to use it, right? No, no, it's my property. I spent 12 years developing it, fights with the government, etc., etc. And I do not want you making money off of my efforts. If you want to make money, no problem. You can pay me to rent it, or you can create your own property. So intellectual property is just the same as personal property, but real property. So, go ahead.
My follow-up.
By the way, he was closing up this, so.
Yeah, real quick. Go ahead. So, my follow-up to that one is, what about the enforcement? If there is no enforcement, does property mean anything? What if no one protected his home?
He'd have to protect
Yeah,
himself.
well, that's his job to protect his property. Trust me, we're enforcing our property rights. So, you can take a look at it. Go to boombusblog.com. Look at the most recent article. I did an analysis of block, formerly Square. This is the first one that I've made public. But I sent a letter of notification to Mr. Dorsey. And he's one of the smallest companies, actually. And he uses the Lightning Network. The Lightning Network infringes. They didn't respond, and I knew they wouldn't. But I did it before the end of the quarter. So he didn't respond. He also didn't put notification of IP claim in his SEC filings. And in those SEC filings, he has a credit facility from Goldman Sachs. That credit facility says you own or have access to everything that you need to run your business, including all intellectual property, right? So you see why it benefits to have economic, business, valuation, technical, legal knowledge, because this is a multidisciplinary industry. Most people don't get it yet. And in that report, which is about 65 or so pages, it goes through his company's litigation history and IP history. Very interesting. His first IP lawsuit, he, and this is interesting, I'm going right up after this. He had a patent dispute early on in the company. Guess with who? The inventor of Square. He actually kicked the inventor of Square out of Square, but the inventor patented it, and he was the sole owner of the patent. Now, fast forward, Mr. Dorsey created this thing called COPA, the Crypto Open Patent Alliance. He says to make sure that any owner of foundational technology patents doesn't slow down the development and the creativity of the industry. That's bullshit. Excuse my French. Because if you look through the history of all foundational technology patents, none of them will ever slow down the industry. The US is the biggest technology center of the world in terms of a country, the deepest, and has the fastest development. And we also have the largest patent office, and the deepest patent office, and the most powerful patent laws. What he's saying and what's actually happening doesn't match. What they really want to do is to make sure that an entrepreneur, such as that dude from Brooklyn, doesn't come up with an idea that they didn't come up with, and they have to pay. But you see, if it's my property, you should have to pay. They have patents, they expect to get paid, so they pooled all their patents with other very benevolent companies who would never, hurt the little man, like Facebook or Coinbase, etc. So they've created what you call a trust, and they put all these. They've concentrated corporate power in a trust. In the 1930s, one of the only two presidents from New York, I'm not going to name one of them, but one of the other two presidents from New York, Franklin Delano Roosevelt, went on a trust-busting tirade because the last time companies concentrated power, they almost took over the country. And so that's where the antitrust laws came from and the anti-monopoly laws. This is what they're trying to do now with COPA, is create a monopoly. The stated purpose of COPA was to defend against aggressors. And once COPA was formed, what was the first thing COPA did? They sued the entrepreneur. They sued Craig Wright. Craig Wright never sued anybody for patent infringement. They went after Craig Wright because Craig Wright sent cease and desist for the copyright of the Bitcoin white paper. Whether you like Craig Wright or dislike him, you should take a look at what actually happened, right? Whether you like him or not should have nothing to do with the fact that COPA says we're doing this for defense, but the first thing we do is offensively sue somebody. That should let you know what their true motives are.
All right. Thanks, man. It was very interesting, Reggie. Thank you so much.
You're welcome. I was able to talk longer because they had that person.